Have you ever wished you could sit across the table from Warren Buffett, ask him one question, and get a brutally honest answer? What if I told you you already can? Because Warren Buffett doesn't just build wealth, he leaves clues in interviews, shareholder letters, quiet habits, and iconic quotes. He's been showing the world how to build a fortune for over half a century. But here's the problem. Most people don't listen. They hear Buffett's advice, but they don't actually apply it. Why? Because it's not flashy. It's not about fast money, and it's never about following the crowd. Buffett's financial wisdom is quiet, but it's seismic. So in this video, we're breaking down the most critical insights Warren Buffett has ever shared, the kind that could reshape your entire relationship with money if you let them. We're not talking about stock picks or market hacks. We're talking about timeless principles, the foundation of real wealth. Stick with me until the end, because insight number 10 is the one that even seasoned investors tend to ignore, and it might just be costing you decades of financial peace. And before we move on, make sure to hit that subscribe button, give this video a like, and turn on notifications. You're about to learn what schools never taught you about money from one of the richest minds in financial history. Insight 1. The most important investment you'll ever make is in yourself. Warren Buffett has said this more times than almost any other piece of advice. The best investment you can make is in yourself. He's not talking about college degrees or expensive seminars. He's talking about your ability to learn, grow, and adapt. The reality is this: skills compound faster than money. Learn to write? You can start a newsletter, pitch clients, sell ideas. Learn to code? You can build tools, solve problems, and create income streams. Learn to speak? You become magnetic in any room and in business. That's currency. Buffett himself took a public speaking course early in life because he knew his fear of communication would hold him back. That single decision changed everything. Think about that. A billionaire made his fortune easier to reach by learning to speak better. So ask yourself, what are you doing this year to upgrade your mind? Because markets crash, jobs change, economies shift, but your skills, they move with you. Insight 2. If you're not willing to own a stock for 10 years, don't even think about owning it for 10 minutes. This one's about patience, and it's brutal. Buffett once said, "Our favorite holding period is forever." Let that sink in. He's not trying to time the market. He's not jumping in and out like a day trader. He's buying businesses he believes in and letting time do the heavy lifting. Think of Coca-Cola, one of Buffett's most famous holdings. He didn't buy it to flip it. He bought it because he believed people would keep drinking Coke in 10, 20, 30 years. And guess what? They did. And his stake multiplied in value. So stop chasing hype. Stop buying based on TikTok trends. Start asking, would I bet on this company existing long after I'm gone? Investing isn't about prediction, it's about conviction. Insight 3. Don't save what is left after spending, spend what is left after saving. This might be Buffett's most underrated piece of financial advice. He says, do not save what is left after spending, but spend what is left after saving. In other words, make saving non-negotiable. Make it the first thing you do, not the last. Most people do it backwards. Get paid. Spend, spend, spend. Oops, nothing left to save. Buffett flips that. Get paid, save a chunk, then spend whatever's left. Now here's a challenge. Set up an automatic transfer to your savings or investment account the moment you get paid. Even if it's just 10%, you won't miss it, but your future self will be glad you did. Saving isn't a discipline problem, it's a system design problem. Fix the system and the savings will follow. Insight 4. Risk comes from not knowing what you're doing. This one is so simple, it sounds almost dismissive, but it's the truth behind 90% of financial mistakes. Buffett says, risk comes from not knowing what you're doing. Think about it. A person buys crypto because it's trending, not because they understand blockchain. Or they jump into options trading because someone on YouTube promised fast returns without any clue how volatility actually works. The result? Stress, loss, regret, and a story that starts with, I should have known better. Buffett's strategy. He only invests in businesses he understands. That's why he stayed out of tech stocks for years, until companies like Apple became more transparent and predictable. You don't have to be a financial genius. You just have to say no to things you don't understand. If you're confused, don't commit. Curiosity makes you richer. Confusion makes you broke. Insight 5. Time is the friend of the wonderful business and the enemy of the mediocre one. Warren Buffett doesn't believe in shortcuts. He understands what most people ignore. Compounding takes time, and the more time you give a great business, the more it gives back. Time is the friend of the wonderful business, the enemy of the mediocre. Let's break that down. Mediocre businesses might show short-term hype. Their stock price spikes after some news or a viral moment, but over time, the cracks show. Margins shrink, competition rises, leadership crumbles. But great businesses, they build moats. They create loyal customers. They make products that don't need constant reinvention, and with time, they dominate. Buffett has applied this to companies like Apple, a brand so powerful it's become a lifestyle. BNSF Railway, a business that quietly keeps America running. See's Candies, a simple, local favorite with unbeatable pricing power. You don't need to find the next big thing. You need to find a great thing that will still be great in 20 years, then give it time. Time is not a ticking clock, it's a turbocharger if you're holding the right asset. Insight 6. Be fearful when others are greedy, and greedy when others are fearful. This is classic Buffett, and it goes against human nature. Be fearful when others are greedy, and greedy when others are fearful. When the market is soaring and everyone's throwing money at the latest trend, that's when Buffett steps back. When panic sets in, a crash, a crisis, a recession, that's when he steps in. In 2008, during the global financial crisis, Buffett wrote an op-ed titled, "Buy American, he was buying, while others were selling in fear." And guess what? That single decision made him billions. It's easy to feel smart in a bull market. It's harder to stay calm in a bear market. Buffett's lesson is simple. Your emotions are your biggest threat. When you feel FOMO, fear of missing out, pause. When you feel panic, pause again. Train yourself to zoom out. Ask, is this a temporary storm or a permanent shift? Long-term wealth comes not from perfect timing, but from calm conviction. The next insight is going to get you thinking and resolve a number of questions about the stock market, but don't forget to like, subscribe, leave a quick comment, and share this with a friend. Insight 7. The stock market is designed to transfer money from the active to the patient. Buffett's not against investing. He's against fidgeting. The stock market is designed to transfer money from the active to the patient. What does that mean? It means the more you try to time the market, tweak your portfolio, or chase gains, the more likely you are to make emotional, expensive mistakes. Let's be honest. Most people lose money not because of bad investments, but because of bad behavior. They sell low, buy high, follow trends, react instead of strategize. Buffett doesn't do that. His favorite move is do nothing. He once said he spends most of his day reading and very little time trading because he knows the money grows, not when you move fast, but when you let compound interest work in silence. Want to play this right? Pick solid, long-term investments, automate contributions, and stop looking at your portfolio every 10 seconds. Always remember that every time you act on impulse, someone calmer is quietly growing richer. Insight 8. Price is what you pay. Value is what you get. This might be one of the most misunderstood quotes in finance. Buffett says, price is what you pay. Value is what you get. It's not just about buying stocks. It's about how you think about everything, from lunch to laptops, to investments to insurance. Most people ask, how much does it cost? Very few ask, what am I really getting in return? Buffett's success comes from being value-focused. He buys businesses that return far more than he pays. He avoids anything that looks cheap but bleeds money later. He looks beyond surface-level price tags. Here's how you can apply this. That $200 course that teaches you a money-making skill might be a bargain. That $900 phone upgrade with zero return on investment? Probably not. That index fund with low fees and long-term growth? Value. That crypto token that promises a Lamborghini in 3 months? Not so much. Train your brain to ask, is this worth it? Not just today, but in 5 years. Wealth grows when your decisions reflect value, not just price. Insight 9. It's better to buy a wonderful company at a fair price than a fair company at a wonderful price. This insight flips the usual bargain hunter mentality on its head. Most people are obsessed with finding undervalued stocks. Buffett, he's obsessed with finding quality even if it costs more. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Why? Because cheap doesn't always mean good. A fair company might be struggling, mismanaged, or in a declining industry, no matter how cheap the stock looks. A wonderful company, on the other hand, has a strong brand, consistent earnings, great leadership, and a long runway for growth. Even if the stock isn't dirt cheap, it can compound for decades, making up for the higher entry price with long-term performance. Think about Apple, Coca-Cola, or American Express, all Buffett favorites, not because they were the cheapest stocks on the market, but because they had staying power. Next time you're investing, ask, would I be excited to hold this for 10 years, even if the market closed tomorrow? That's the Buffett filter, and it separates the gamblers from the builders. Insight 10. If you don't find a way to make money while you sleep, you will work until you die. This one hits hard, and it's probably the insight that changed more lives than any other Buffett quote. If you don't find a way to make money while you sleep, you will work until you die. Buffett is talking about passive income not in a trendy hustle culture kind of way, but in a financial survival kind of way. Because here's the truth, you only have so many hours in a day, and if your money isn't working for you, then you will always be working for money. What does Buffett recommend? Investing in businesses that grow with or without you. Dividend-paying stocks that send checks every quarter. Compounding assets like index funds, equity, not just income. Buffett became a billionaire not because he worked 120-hour weeks, but because he learned how to let capital do the heavy lifting. Ask yourself, are you earning interest or paying it? Do you have income streams that don't require your presence? Are you building assets or just collecting expenses? You won't build wealth on wages alone, not in today's world. You need leverage, and leverage starts with systems that work while you sleep. Insight 11. Debt is the enemy of wealth. Warren Buffett is famously debt-averse, especially when it comes to personal finance. He once told a group of students, if you're smart, you're going to make a lot of money without borrowing. And in another interview, he said that using credit cards is like trying to go uphill with a brick in your backpack. Why so anti-debt? Because debt limits your freedom. It puts compound interest against you instead of working for you. Buffett's warning isn't about mortgage loans or smart business leverage. It's about lifestyle debt, high-interest consumer debt, emotional spending masked as convenience. Here's what debt does. It kills your ability to invest early. It turns your paycheck into someone else's passive income. It adds stress and limits optionality. So, if you're paying 20% on credit card debt but earning 7% on investments, you're falling behind, no matter how smart your portfolio is. Buffett's mindset. Avoid debt like the plague, especially the kind that makes someone else rich at your expense. Your first wealth goal shouldn't be to invest, it should be to escape debt slavery. Insight 12. Reputation is a financial asset. This one might surprise you, but Warren Buffett treats reputation like compound interest. It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. To Buffett, character is capital, and the people you do business with are often more important than the deal itself. At Berkshire Hathaway, Buffett only partners with CEOs he trusts implicitly. He avoids companies with shady track records, no matter how profitable they appear. Because when trust erodes, value collapses. Think about it. A bad Yelp review can cost a local business thousands. A PR scandal can wipe billions off a public company's market cap. A reputation for integrity can open doors for decades. Want to build Buffett-style wealth? Start by guarding your name like it's your portfolio. Show up, deliver, be honest, even when it hurts. Say no when something smells wrong. Financial success flows faster to people others can trust. That's a truth more powerful than any stock tip. Insight 13. Boring is beautiful. If you ever look at Warren Buffett's investments and yawn, that's the point. He doesn't chase hype, fads, or headlines. He invests in boring businesses that do boring things beautifully. Think railroads, insurance, soda, candy. Why? Because these businesses are predictable, essential, and cash flow machines. And that's Buffett's dream. Steady, reliable compounding over decades. Most people overlook simple businesses, but Buffett knows simplicity scales. Next time you're tempted by the next flashy startup or volatile trend, ask, do I understand how this business makes money? Will people still need it in 20 years? Because in the end, slow and steady isn't just safe, it's scalable. And scalable wealth, that's the real dream. Warren Buffett's insights are boring, and that's the point. If you came into this expecting some magical tip to triple your money in a week, you've probably realized by now that's not the Buffett way. His success didn't come from some secret algorithm or high-frequency trading. It came from the opposite: patience over panic, simplicity over flash, discipline over impulse. Warren Buffett mastered money, not because he outworked everyone, but because he outweighted everyone. He made boring habits look brilliant. He reads 5+ hours a day. He invests in companies he actually understands. He avoids debt, avoids trends, avoids drama. He doesn't try to time the market. He lets time do the work. The stock market is a device for transferring money from the impatient to the patient. So when people ask, how can I invest like Buffett? They're usually looking for the wrong answer. The real answer isn't sexy. It's habits, it's principles, it's mindset. You don't need to be the smartest person in the room. You just need to be the most consistent. If even one of these insights clicked with you, then don't let it end here. Don't chase money, chase value. Think decades, not days. Buy businesses, not just stocks. Save aggressively, but with intention. Invest automatically, and let time do the heavy lifting. Start with one habit, just one. Maybe it's tracking your spending. Maybe it's reading one investing book this month. Maybe it's finally opening that index fund account. Whatever it is, do it today, not next week, not when you have time. Today. And if this video gave you even one insight worth applying, then smash that like button. Subscribe so you never miss what's coming next. Drop a comment with the insight that hit hardest. Share this with one person who needs to break free from financial confusion. Because knowledge is one thing. Applied knowledge, that's wealth. Thanks for watching.